Well, hello and welcome to another Market Conversations. I'm your host, Jerry Hall, broadcasting from lovely Costa Rica. Hello, Scorpion, Elipool, Kathleen. Hey, Catherine is actually, and Patsy are catching the live broadcast. Way to go, ladies. Hi, Pete Kelly. Let's see here. Where do I want to kick it off tonight? A couple of things. I wanted to set the tone with a conversation with you folks, and I'd love your input, please, on what you see as ramifications coming from the upcoming lifting of the deferments, right? These rental deferments, mortgage deferments, things of that nature. I find it really interesting that a very large portion of our existing population is going to have to pay a bill, right? The check is coming due. We're about 3 weeks away from these moratoriums being lifted. Now, that's not to say a new bill won't be passed. Toot sweet to extend these, but there's always going to be a winner and a loser in that situation, right? So if the bill doesn't get paid, do the homeowners that are renting to people who aren't paying their rent, do they just continue to work out different deals with the outfits and banks and establishments that own the mortgages on their rental properties? This is going to be really interesting to see how this plays out. I think it will have an effect. I think it will have an effect on our crypto market, and I think it will have an effect on the greater market as a whole. To what extent, I'm not really sure. But I will tell you that it's going to be fascinating to watch, right? Another topic I wanted to talk about was the soon to be expansion of some of these smart contract platforms. Before I do, I want to say hello to DC Precise. I didn't catch you when you came in. Tony Morissette, Kathleen, nice to have you from Hawaii. Ruben, Andre, Jungle Inc., Sylvia, nice to have you guys in the house. I wanted to just kind of look at the expansion of our space. For a very long time, it's been Ethereum that has held the lion's shares of decentralized applications built on a smart contract platform. And with that, garnered a tremendously large ecosystem, right? Developers, capital, new companies. And one of, some of the really interesting things that have come out of these Ethereum, we'll call it sandbox, whatever you want to call it, have been things such as decentralized exchanges, NFTs, garnered a tremendous amount of quote unquote publicity, right? Airtime. Well, we've got smart contract platforms that are coming to life right before our very eyes. One of which is very dear to me, is the Cardano ecosystem. Now, one of the really interesting things I find about the Cardano ecosystem is that there's a mix of brand new entities launching on Cardano that have not been in existence before. But there's also a pretty large, from just a volume standpoint, number of these entities that are actually coming over from Ethereum, some of which have every intention of being cross-chain compatible, which just means they're going to issue and mint tokens that can exchange both on the Ethereum platform and on the Cardano platform. Now, the same token cannot do this. There's no one token that can do this, but they've created a mechanism in which you, the user, if you want to exchange your Ethereum token for the Cardano version of that token, it seamlessly converts. So as the Ethereum token is becoming the Cardano token, the Ethereum token is burned and the Cardano token is minted. This will be really interesting. One of the things that I put in, as you see a scrolling banner there at the bottom, are some acronym definitions. And I think this is important to talk about and really something that I'm kind of quite excited about. So let's just dive into that topic. So in traditional markets, when a company wants to come to a public market, they go through a process. They call it initial public offering. We've all heard of IPOs, right? The most famous one in our space is the recent IPO of the Coinbase platform. Now, traditionally, that has always brought a tremendous amount of credibility to a company. The reason being is because of the laws governing how a publicly traded company has to operate. Their disclosures around their stock issuance, their options issuance, how many employees, et cetera, et cetera, et cetera. Oh, you know what I did, folks? I just got a text from Nick. I screwed up and didn't send him a friggin' invite. Let me see if I can do that now. I can, and I will. Bang. 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 Pow. I should have done this before the show. I apologize, folks. Boom. All right. Any minute, our guest, Nick Black, will be popping in. So, but these definitions, this initial public offering has always been kind of a rite of passage, right? For a private company to go public and have access to public markets and public capital. Well, since crypto came along and Ethereum was built, we saw the introduction of what they call an initial coin offering. Now, this doesn't come without a tremendous amount of uncertainty, right? And clarification. We don't have really super clear regs in crypto. Were these entities that were creating these ICOs, are they actual are they security offerings in the way that they're doing their token creation, et cetera, et cetera? A lot of questions, right? This next little acronym, the IDO, is the initial decentralized exchange offering. Again, a lot of questions because it's basically pre-saling, of a coin that isn't alive yet. And it's at the inception of this IDO that the coins get put out to the market with an initial price and buyers buy them, trade for them on these decentralized exchanges. Now, this fourth definition, I found this when I was researching the Sunday swap DEX for the Cardano ecosystem. And they are doing what they call an ISO, an initial staking offering. Now, I find this really interesting. What they prescribe to do is to say, hey, folks, if you'd like to get our Sunday swap tokens, then what you need to do is you need to stake your Cardano in our staking pool. We will take all of the rewards that are issued as a result of your staking, and after a certain amount of epochs go by, we will start to distribute our Sunday swap tokens to you in exchange. Really kind of interesting. So I want to quickly say hello to Kenna Jill Bias, Simon Brickman, Lori Bearfield, Tiffany, good to have you in the house. William, nice to see you. So I see that our guest has popped in. Let me bring this down, bring this up,
boop,
and
beep, boop, boop,
all
beep, boop, boop, boop.
to a good friend of mine, Nick Black from Crypto and Coffee Crypto and Coffee TV Livestream, which is the name of his channel this week, subject to change,
by next week.
By next week because of YouTube. But, one of the things that is really wonderful about Nick is that Nick challenges me to think and understand what I'm talking about, because he's not afraid to tell me or anyone you're wrong. And I think we all need friends like that. We need friends that will tell us if we're wrong and not be afraid to be wrong themselves. And when they are wrong, they'll tell you, okay, you thank you for pointing that out. I was wrong. So Nick, good to have you on the show. I opened up talking about the upcoming Rent-A-Geddon, 3 weeks away from these deadlines being lifted. I started talking about the advent of a lot of these, these platforms that we know and love, starting to roll out real functional products through their smart contracts. I'm specifically started off with Cardano, but I also want to address DOT, and I want to address what's coming with the XRPL specifically, their DEX, and some of the things that I'm hearing are starting to be built on that. So I think that'll be really, really, really interesting. What part of that you want to tackle first?
So, the near term is Polkadot, right? So that's this month. That actually starts next week, all the parachain offerings. So
exciting.
And Polkadot looks cheap right now. Compared to, 6 weeks ago, it was trading right at $50. It's trading at $21 right now. It's down 43% on the month. Man, that looks tasty. Because my guess is they're going to take out their all-time highs when they start doing these offerings. So I got, let's see, 96 companies. I think it's 96 companies vying for slots through Kusama. And so for those of you, and maybe that's where we talk about is just what the difference is between, real quick, Kusama and Polkadot, and how, Kusama is a test environment. And so they rolled that out so that you could have a place where you could kind of move fast and break stuff before you launch or potentially launch on Polkadot. And so Kusama, they sent out the tokens through an airdrop to Polkadot owners back in the day. And here we are now. And they had started this in 2016. So the testnet, Kusama it's a live testnet. So when you see, when you see stuff happening on Kusama, many of those parachains many of those projects may end up as Polkadot parachains. So there's 100 total parachains, the way it's set up on Polkadot. And I think 3 or 4 or 5 of them are nonprofit or kind of, what is it, like good, I forget there's like a cool term.
Socially conscious.
Charitable, ESG, and some more stuff. But anyway, so some of those are kind of have been set aside, but there's about 96 that are up for grabs, and that starts on the 15th.
Yeah, that'll be interesting. We're always looking for a way to, and I'll just cut to the quick, not politically correct, buy in low, right? Buy in low. You never know what application will reach 1 billion people. You don't. It's kind of, it's, you assign probabilities and you go for it. This widely huge success of Ethereum and applications on top of Ethereum, whether or not we like gas fees or not, you can't deny that Ethereum gave birth to hundreds of different dApps, right? You can't deny that. Well, when I see these new layer 1 solutions, DOT, Cardano specifically, looking and assembling these buckets of different companies, I can't help but get excited that there's going to be a few winners in there. I mean, long-term winners, 10-year winners, most likely. Not to mention a bunch of hype winners in the middle. What are you anticipating as far as what we might see in some of these new layer ones opening up their ecosystems? Do you think we'll see anything like we saw with the explosion of Ethereum, or was that a once in an innovation cycle type of event?
Well, I would say look at how successful Binance Dumb Chain was, and every other project is getting nuked. And people are still building on it because that's how bad Ethereum is. And it's almost not fair to blame Ethereum because it was the first one out the chute. They didn't really know what they were building. Remember, the original idea was a world computer. Well, it's certainly not that, but it is the foundation. It was the only place up to about a year and a half ago where you could launch an asset, really.
Right.
And so everybody did, including about 8,000 really stupid junk projects. But they all got nuked, really, when the fee paradox came into play. And for those of you that don't know what that means, it just means that the way Ethereum is built, you burn Ethereum to process transactions. So the more successful it is, the less successful it is, because it becomes more expensive to do transactions. And you get to a point, and this was even admitted by Vitalik, where it's now so expensive that most of the retail investors and traders, they can't participate. You can't stake or unstake. You can't go join, token sales. You can't move stuff in and out of MetaMask. You can't go join liquidity pools because it's a one-way trip. And by the way, if you decide you want to stake Ethereum waiting for 2.0, best of luck there, because you may never get those tokens back out. Now they could do a fork and pop, and there's all sorts of ways they could release that value. But by Vitalik's own words, we're not probably going to reach 2.0 until the end of 2022. So, this continues, the goalpost continues to be moved. Now they can leverage Matic and some of these other layer 2 kind of scenarios all they want, but that doesn't solve the inherent problem. There are other problems that are more structural in nature, the state condition problem and some other things like that Ethereum won't fix, even going to 2.0 and firing all their miners and all of the kind of internal chaos
let's jump into that just for a second, because as an Ethereum holder, I also took a run at Polygon, used to be Matic, for that exact reason. And I will tell you, and I'm a novice, okay, I'm a tech tart, but I have not been able to leverage Polygon for anything. What value has Polygon brought me as a MetaMask user interacting with 1inch Uniswap, any of my various ERC20 tokens that are doing whatever they're doing? I don't seem to have in my MetaMask wallet use Polygon to reduce your fees. I haven't.
Well, true, but you will be able to. You'll be like, you can wrap an asset. You can have a Polygon wrapped asset in the same way you can have a near wrapped asset. So you can do these weird kind of wrapping functions and kind of use other, matter of fact, Leroy, he's building something in Polygon right now. He's building a Matic. So I don't want to get into the software development stuff because I'm not skilled enough to explain it in a way that would make sense. But I do want to address a couple of the comments. So Crypto Professional, I was reading some of your stuff, and I would just say this, never speak in absolutes, because you could be right, but none of us have absolutist. Ideally, you never are absolute. We don't know 100% anything. So when you say Cardano isn't scaled either and never will be, I'd be careful about that. Charles Hoskinson and his 20 developers, it's like 290 developers. They've published over 100 papers with data scientists and everything around the world. And, again, publishing papers, not an easy chore. There's professors and stuff that go their entire career and never do it. So getting peer review in journals and around, it's a tough business. And I would also say that thinking that Cardano and Polkadot aren't going to work is saying that Ethereum would have never worked too, because the three smartest people at Ethereum were Vitalik Buterin, Charles Hoskinson, and Dr. Gavin Wood. Dr. Gavin Wood, if you're essing on Polkadot, you're essing on the guy that wrote Solidity. Well, there is no Ethereum without Solidity. There are no smart contracts without Solidity and parity and all that kind of stuff. So you can't. It's kind of like saying I like Bitcoin but not blockchain, or blockchain but not. They're you can't separate them. They're of the same DNA. So again, I would say that having other competitive layer one solutions like Near, like Cardano, like Polkadot, like Cosmos, go down the list of the projects you like, Algorand and stuff like that. It's important because people need options. This is why Binance Smart, Dumb, Retarded Chain was so successful and still is, even though every one of these projects gets nuked. Every other project on Binance gets nuked. People are still building on it because it's so bad to build on Ethereum. That shows you how much desire there is. And my guess is the DeFi products, because that seems to be the low-hanging fruit, that's where it's going to start. Things like Bondly, I'm looking at. And I think Bondly is going to co-deploy both on Polkadot and Cardano. So you're going to have probably liquidity
is Bondly
pools.
On this?
Yes. Bottom left, top of the NFT box.
Oh, yeah.
So what I think you're going to see are swap functionality like MetaMask being incredibly useful. You're going to see wrapped functionality. You're going to see ERC20 converter functionality. You're going to see liquidity pool creation, stable coin creation, Oracle creation. These are all functions that the entire space needs. And they will, and if you're a company, you would leverage every way you could. You would launch on Ethereum, launch on Polkadot, launch on Near, launch on Cardano. You wouldn't limit yourself. And so I don't think I don't think it's a winner takes all. I think it's an everybody takes a portion of the market where the protocol seems to have the most utility. That's all I had to say about that.
And that's an interesting perspective from that side of the aisle, which is the app itself, right? The people behind the app. And then you're going to find that the app gets the most use on the protocol that gives the users the best user experience, the most value per monetary unit, etc. Right?
Well, and again, crypto professional, from your name, I can tell that you are both deep into crypto and a professional. But I would warn you against the absolutist thinking. All of us should be not absolutist. We should always be open to anything can happen. Listen, if Ethereum 2.0 could come out tomorrow. It could. It's unlikely. I wouldn't gamble on it, but it could. So when you might have some brand new hyped up crypto projects launching on Polkadot. True, I agree. I think Polkadot's going to be more hype than Cardano. But there will never be a legit established enterprise. Well, I mean, they have 5 governments. So I don't know what would it count as an established business, but I'd say, a government of a country in Africa is pretty legitimate. To me, that seems.
Yeah, we're kind of, I think Crypto Professional and I are both kind of leaning on until Joe's Plumbing is running its supply chain on that protocol, it's not real. It's just nothing.
Well, so what I would say is the analogy of the skyscraper, right? You don't build, 90 floors of a 100-floor skyscraper and then quit.
Or realize you had a design problem and have to go back and try to fix the foundation. It
really, and I would just say this too. And again, it doesn't have to be a winners take all environment. The idea of multi-chain, cross-chain, chain interoperability. That's why I'm so interested in Rune and Thorchain. No one's been talking about Thorchain. No one really cares, except that if they add some element to this idea of cross-chain capability, cross-chain, hell, just load balancing. So if like in the server farms, they'll spin up virtual servers whenever there's a big influx in transaction necessity, right? A bunch of volume comes in and we got to get this done. They'll spin up virtual servers. They will load balance and then they will wind those servers down. That's how Amazon AWS works and a lot of these cloud-based serving farms and things like that. So the idea that these protocols could offload transactional overload to other, operable or interoperable blockchains is beautiful. Because no one of these chains is going to solve all of the ills of society. It's going to take a bunch of redistribution of transactions in the fastest and most elegant way. And that's probably going to occur on a whole bunch of blockchains, all in semi-real time.
Yeah.
I mean, that's the way I look at it.
You know, and it's like for a very, very long time, this has always been so far down the road that you kind of had to be a visionary to envision it. But the truth is, it's here and it's coming now. Test nets are deployed, right?
Yeah.
Things are happening. We can expect by the end of this year, fully functioning dApps on these layer 1 protocols other than Ethereum. And I think the proof will be in the pudding, right? Over time, we'll see. You know, one of the things I wanted to talk to you about, Nick, that I thought was so important, especially in today's environment right now, with a lot of the larger monetary policy influences that are coming, this whole inflation, deflation type of debate, is this mindset that for us, the investors, and I get this, I'm getting a lot of phone calls, a lot of private messages, and a lot of stuff. Seems like folks are trapped in this overestimating the future and overestimating the present and underestimating the future. And it's this whole paradigm about human beings having a hard time being able to extrapolate, you know, exponential thought or curves or whatever. I mean, are you getting any of that kind of feedback from the folks that you interact with?
So, I mean, the way I kind of approach the whole protocol layer space is you want exposure to all of the most likely candidates. It's kind of like betting on every single racehorse.
Yeah.
And there's a lot of people are saying who's going to win. And I still think that's flawed thinking. None of this is who's going to win. We know there's going to be some losers. My guess is Binance Smart Chain falls really hard when there are options. But you know what? Right now, this second, if we were going to go launch a project, we'd launch it on Binance. And yes, it's scammy. And yes, CZ is a thief. And it doesn't matter because Ethereum is not a working model right now. And it gets worse. Remember what 3-4 weeks ago when Ethereum was $4,100? Retail transactions came to a halt. Again, not my words, Vitalik's words. He said the retail trader has been pushed out of using Ethereum, and this is a problem. And this is when he was kind of explaining to everyone, listen, you know, this is what it's going to take. And so, again, you can be more of a centrist than an absolutist. I think that's the way you should approach it. I know a lot of people are miffed. They don't like Charles for whatever reason. You don't have to like any of these guys. But you have to respect what they've done. And so what is the saying we always say, Jerry, do you want to be right or do you want to be rich?
Yeah, exactly. I want to be rich.
So Crypto Professional, do you want people to high five you in 2027 when Ethereum 2.0 launches and they ungum those assets? Or do you want to be rich in 2022? And I'm not saying you have to dump your Ethereum. You should own the entire smart contract space, all of it. And you own these assets in the percentages that reflect your belief in their true nature. But not owning any of them is foolhardy, I think.
I could not agree more. I have a various levels of percentage of my portfolio, but I probably got 8 or 9 of those bad boys, and I really, really like them.
Simon just won the internet.
So let's dive into this IPO, ICO, IDO, and the brand new emergence of an offering that I think is going to, if it's handled well, is going to spread like wildfire for new projects coming to these proof of stake protocols, and that is the ISO. But quick, I started to do this in my monologue, a quick kind of breakdown. IPO, where does it come from? ICO, what's it about? IDO, And then boom, I'll come in with ISO because that's what I've been deep into research on the last week. So why don't you start, Nick? Give us a history on what you know of the IPO.
Well, the IPO in the traditional equity space is an initial public offering. It's when a company that's reached a certain amount of kind of penetration in the market and has bankrolled enough to make an argument to the public that it wants to go public. It's a way for the early investors to exit. It's a little kind of benefit to them, and they may have gone through rounds and rounds and rounds of, Series A, B, C, D, all the way funding, angel funding before that. And it's a chance, it's a liquidity event for early employees, for early investors. It's also a way to take on cash if they want to do some kind of rapid expansion. It's usually a liquidity event, if we're being honest. But sometimes it's both, right? Where it also carries the function of bringing on a bunch of new capital so that company can expand. They're expanding essentially through debt because they're releasing ownership in the company. A percentage of that ownership is being traded for cash, and they can use that cash. Anyway, so that's the ICO the IPO. And the problem with the IPO model is if you didn't know somebody, have a good old boy deal, have a big fat account at one of these investment houses, you didn't get access to these IPOs, these public offerings. And anybody who buys an IPO on day one is a dummy because you're getting dumped this token at an agreed upon price by a bunch of salesmen, right? And they're just shopping where they're going to make the most money and sell them. So, you would at least I would never buy on day one. Now, I was really young when this was popular, so I was not anywhere in the realm of people that would get exposure to these IPOs. And basically, it was not an open market. We didn't really have access. And then you have the ICO, which is the initial coin offering, and there's a bunch of varieties of that, but that would be a way for these token projects. And it got perverted, to be fair. In 2017, you saw the rise of the ICO, the initial coin offering, where they would say, we're going to invent time travel. Who wants in? And they would sell the tokens, and they would sell them fast. And then the government started coming in saying, this is a little sketchy. So they started doing these very clever, nuanced versions of these. So that's where the SAFT, it's a agreement for future tokens, security agreement for future tokens came in, and they had these different contracts that all rhymed with SAFT and they weren't just all ICOs of a different color, right? But it was the same principle. But what they would do is these lockups and things like this, and you'd have to go outside the country, or you'd have to usually use Bitcoin, Ethereum, or whatever in order to buy these assets. You couldn't be a U.S. citizen. This is like all these ways to sidestep regulation. And then the hammer came down on a lot of these, and we just continue to have these iterations, but they get closer and closer to some kind of regulatory sandbox or some kind of like safe harbor type thing. So that's kind of the background, at least a simple background of the IPOs in the equity space, traveling over, and the ancillary would be the ICOs in the digital asset space.
And then, you've got the IDOs, right? These initial DEX offerings that are happening within an actual decentralized exchange. Really kind of fascinating from a technical standpoint to think about how they structure a contract for that. You know what I mean? In the different things that are going. But I tell you what I'm really excited about as an investor, right? As a retail guy who's not into all the, I don't want to study the programming language. I don't want to learn Selenium. I don't want to learn Plutus or any of these kind of things. Haskell, I'll leave that to the pros. What I want to be able to do is I'd love to be able to pledge my stake to a stake pool that generates a new project's token for me. It's kind of like a way to dollar cost average into something where I'm actually foregoing some yield, but earning, coins in a new application that's coming out. And that's what this ISO is looking to do, being and that flag is kind of being charged or carried by the Sunday Swap folks that'll be launching on the Cardano ecosystem.
When does that, do we have any kind of tentative launch date?
Yeah, they had some papers. They were going to start May 15th. They didn't. I mean, sorry, they were going to start May 24th. They didn't. It's been delayed. There was some, I guess they got some legal counsel that said, hey, listen, we got to work out a few kinks. But I would expect it relatively soon, probably before August rolls around. We'll have very clear ways to, from whether it's a Euro wallet or a Daedalus wallet, be able to stake to a designated staking pool. Like I've already, in my Daedalus wallet, set up a new wallet just for Sunday Swap, right? I've got tokens in there. They're currently being staked to the Texan stake pool, or Buddy Adams staking pool, while I wait. But at some point, they're going to open up their staking pool, and every Cardano that I stake to it, if it generates the correct math, which is something like they would talk about 8 cents per Sunday token. So you do the math, 8 cents for, whatever Cardano is trading at the time. 3 epochs goes by and boom, you start collecting Sunday Swap tokens in your Daedalus wallet or your YOLO wallet. I just think it's a really fascinating fundraising mechanism that does not put me at risk for new capital. You know what I mean? And as an investor who's always thinking about risk, forgoing some yield versus delegating new capital to something that's unproven, to me, just seems like a less of a risk. I can continue to allocate new capital to the projects that I'm already trying to build greater position. Your thoughts on that mechanism?
I like all of these new funding mechanisms that let you participate. There are different kinds of community engagement with a financial side to it, right? You help us out, you help spread the word, you jump on board, and we will shower you with potentially things that can trade for currency units. So I don't know how you wouldn't like that. Again, listen, it's very easy to get bitter about projects we've missed. If I was to venture a guess, I'm guessing that there are people that missed Cardano from 3 cents and 6 cents, 10 cents, 50 cents, $1, $1.10, $1.30. So, and it's okay that you miss these things. You're not going to get them all. It's not Pokemon. You're not going to catch them all. But if you have a more well-rounded, more holistic approach to investing in the space and invest in sectors and quit thinking so tribally, then it doesn't matter. If you own the sector, you get to grow with the sector. I don't like Ethereum, but I respect the amount of projects that are on it. You're also going to see a torrent of exits, but it's not going to be a pure exit. And this is another thing that I think people get wrong. They think, oh, Cardano's going to launch, Polkadot's going to launch, everybody's going to leave Ethereum. They're not going to leave. They're going to leverage. They're going to leverage Ethereum. They're going to leverage Polkadot, leverage Near, they'll leverage everyone they have to get their customers back in the routine of utilizing whatever their reason depth is, right? Whatever the purpose is of that DApp or that token. So think sectors and think percentages. And if you missed something, it's okay. But don't be bitter. I see a lot of bitterness, and usually that bitterness is on the backside of having missed something. And then I would say to myself, well, if I missed something, is it possible that I was so clouded in my judgment that I had blinders on? Well, take the blinders off.
Right.
You're not going to catch them all, but if you play by sectors, if you invest in sectors, you can win in the end. And again, who cares who calls what? I don't care if Jerry discovers a token. It doesn't make me angry that Jerry discovered it and I somehow didn't. If it's a good token and it makes sense, and I think it's going to change the world, and I think there's value in it, I'm going to fucking buy it. And me and Jerry can high five on the beach later. I don't care about being right. I want to be wealthy. I don't give a shit how I get there.
Right. So I'm going to throw this question up. This comes from Just for Watch. Please, guys, give us a price prediction for Cardano ADA this year. I can tell you Just for Watch, that isn't what I do on the show. I don't give price predictions because the truth is I don't know. But what I can tell you, and with a tremendous amount of conviction, is that this digital asset space is going to grow, and it's going to grow based on networks of people using the technology to perform A, B, C, D, and E, right? And when I compare this new innovative technology to existing legacy structures, there's no contest. There's no contest. I have, in my personal private company, had to deal with supply chain management stuff for hardwoods out of Ecuador to Northern California. I've had to deal with what it's like to track money through Swift. I mean, it's atrocious. So just on the strength of that, not to mention living in South America, I am seeing that this space opens up for so many people, right? When from this basic premise of the person with $1.50 worth of colones can access a product that the same wealthy person with $1 million worth of colones is going to access, and they're on equal footing from the governance and the code that's written, I see something that is going to continue to gain ground. Now you start adding actual functionality, right? Look at everything there is in existence. Ubers and Airbnbs and Spotifys and YouTubes and Twitters and that's just to name a few. This tech presents disruption to all those things. Anything that has somebody in the middle of a buyer and a seller, or a service provider and a service user, is open for disruption with this technology. It would be absolutely ignorant to not believe that there's going to be a sea change in the way people do the same things we've always been doing, just in a different way on different platforms. Nick, do you think I'm nuts? Have I gone mad?
You're insane, man. So look, any business, like, just reduce it to the simple. Like you said, any business where there's a rent taker and they're standing in the way of a customer and a service, or a swap of services, or a business and a consumer, if you sit in the middle and all you do is collect rent, very likely your days are numbered. If you have a platform that has an inefficient way to connect two users, or a service and a customer, or a business and a customer, in the same way that a rent taker, if you're an inefficient platform in the middle, you will go away and someone more efficient will step in, and less friction and less friction and less friction until it's seamless. And then technology will take us to a point where there's even more friction reduction. So this is going to happen. And just, when you look at the space, I would urge you to not be so maximalist or tribal in any one project, but again, be more holistic and say, we know disintermediation is happening. We know there's all these markets that can be disintermediated that haven't yet. Go read a white paper. Take the sector. Go read just read the first page of the Cardano white paper, the Ethereum white paper, the Polkadot white paper, the Flare white paper. If you can get through that second grade garbage, just read the white paper. Just read it. Read one page, if nothing else. Make sure you've read the Bitcoin white paper, right? Because that's where it all starts. But you have to get back to a point of not judging these things until you really know them. It's kind of like when you see someone on the street, you're like, that guy's a jerk. I don't like that guy. You don't know. The guy could have had a terrible day. He's got a weird look on his face. His car just broke down. He's walked 17 miles and he lost his wallet. You caught him on a bad day. These projects can be like that. You can just make assumptions that you don't like something. And normally, if you dig in a little bit, you start to find things like, oh, that's kind of cool. That's interesting that they're doing that. And then you might come back to it in a few weeks and go, okay, that makes more sense. And maybe until you look at the other projects in the sector, that it doesn't quite make enough sense. Like, why is this important? And so, and again, and then layer on top macroeconomics and layer on top the landscape, the real world that we live in that's kind of crappy and gummed up. And, you know, El Salvador is a great example. Look at the situation there. Everybody's like, woo woo. All the Bitcoin maxis are like, yes, we're going to rule the world, Bitcoin standard, all this kind of stuff. And then you look and you go, well, Bukele's kind of a dictator. And he's kind of nasty. And he has henchmen. And, you know, people show up dead around that guy. But that part of the narrative hasn't really transferred over. It's just woo woo. And so I would just be very careful. Now, you can also have those two things. You can have a guy that's quasi awful do something that's quasi brilliant for completely the wrong reasons, and it's still good.
Yeah.
This is still wonderful for Ecuador, for South America, for Paraguay, for all these countries that are lining up, and they may have more kind of honest intentions maybe than Bukele, but it doesn't matter. It's kind of like, we'll accept a little bad if the end result is good. It's another friction being reduced. It's another option for the impoverished. And so I just think it's important. We judge very quickly. There was a line in Ted Lasso, I don't know if you saw it, where he said, one should be curious, not judgmental. Probably the most important sentence in all of finance. One should be curious, not judgmental. I always think about that when I make a snap judgment on a token. I'm like, it's bullcrap. Even if there's bullcrap people assigned to it, doesn't mean it's bullcrap.
Wow, this is like, I don't know what happened, but like Friday night, I guess the sun went down in Sherman Oaks, and Nick went, I'm going to present a more mature, level-headed Nick on Jerry's show. I guess unless I bring up XRP, and then we can.
Listen, I'm not an XRP. There's nothing that XRP did to get it in this situation. It's two douchebags. Really.
I was joking. I did not want to open that can of worms. You know what I want to talk about? And I think this to me is the most fascinating element of this El Salvador thing. And that is a sovereign nation with its decree of legal tender now opens up every single banking entity in its borders and every business that charges, whether it be a restaurant or a landscaper or a renter, a property owner, does not matter. It now forces the entire economy to have Bitcoin businesses or crypto businesses. It is the green light for the creation of new companies. And I think that to me is the most fascinating element of how this will play out.
So, and to add on to that, Jerry, and real quick, crypto professional.
Before you leave, crypto professional, listen.
Anybody can have any opinion. You don't have to ever certainly agree with us. If you ever listen to Jerry and I, we don't mind people coming in. It doesn't matter what your position is. We obviously welcome the discourse. You have to rigidly test your thoughts and your ideas. Otherwise, you don't deserve to be in the space. So you are always, as far as I'm concerned, you're always welcome to hang out with us. So let me say something real quick about El Salvador. And a lot of people are like, okay, how do you go from zero to Bitcoinization in 90 days? So what the government's going to do is they're going to create essentially their own liquidity provider. Now, everything will be priced in US dollars, but people will be allowed to, at their discretion, extinguish debt, take on debt, lend, buy, pay, borrow, whatever, in Bitcoin terms. But you have a lot of vendors that they say, listen, I sell bananas, I sell straw hats. What am I going to do with the Bitcoin? I don't know anything about it. If someone wants to come pay, what am I supposed to do? Well, the government's going to create not only an educational program to teach people the value of these assets, which is probably the most important part of this whole thing, but they're going to create a liquidity pool so that people in real time, and they're going to leverage the Lightning Network, which is the first real use case of Lightning, which for the Bitcoin maxis is kind of an accidental win. And that's why you saw Dorsey jump on board and say, hey, we're putting money into Lightning. Matter of fact, Twitter is probably going to start running transactions through Lightning. So, and it makes sense, right? And apparently he's been behind this pretty significantly. So anyway, they're going to be a liquidity pool. I've heard somewhere in the neighborhood of 150 million USD where people could process tiny transactions in real time. So they wouldn't have to sit in Bitcoin if they're worried about Bitcoin volatility,
right,
or they simply don't even know what it is. So those problems will be solved essentially by and again, you could say government backed, whatever, but a liquidity pool, which will act as a reservoir where you could process real-time transactions, tiny transactions without having the fees, and no one would have to stay in Bitcoin. They certainly could if they'd want to.
Well, like, again, I'm really, okay, that is excellent. Like I said, I'm really excited about what it is green light time for businesses, right? So on your show, whatever the day it was that I was on your show with you this week.
Yesterday.
Was it yesterday?
It was.
Was it? Okay. A lot's happened. Expat Matt reached out on your show. I sent him my email address. Hey, BZ Comedy Channel. Nice to have you, brother. I responded. We got on the phone. We talked for 2.5 hours, it felt like. And he is in Guatemala, just a few hours away from driving into El Salvador. And I'm just the only thing standing between me and El Salvador is Nicaragua. Nicaragua, and about 80,000 gorgeous women on the Pacific coast, because that's where all the gorgeous women in Nicaragua congregate, is on the Pacific side of the country.
Hashtag condoms are for sailors.
And so one of the things that I've always had like rustling around in the back of my brain was this Crypto Espanol type project thing that started off with a thing like what I do on YouTube and Twitter and Facebook and Patreon, and then start adding actual, businesses like a brokerage, Bitcoin ATM, Well, even though it's kind of open for business down here in Costa Rica, the banking relationship for the business element is not crystal clear. Actually, it's problematic, as it is in Guatemala, as it is in every Latin American country. It's kind of, it's tricky. It's weird. This is green light. This is open for business. And to me, that is extremely exciting. Like, I want to go to El Salvador. I want to price ATM machines. I want to start training Hispanic people and educating and getting, develop a team of employees to, do the partnerships and work out the contracts with the locations and work out the banking relationships and the incorporation. It is just because somebody's going to. And I do not think for 1 second Bitcoin is going to be a widely used currency. But I think once people start understanding the value proposition of a scarce asset in a world where currency purchasing power is continuing to be decreased, they're going to start shifting from, my currency is a depreciating asset. When I use it to buy cars and things like that, those are depreciating assets. Everything I'm spending my money on is a depreciating asset. I'm losing ground. The only way to gain ground is to get into scarce, appreciating assets, right?
So that gets into the Grisham's Law argument, doesn't it? That bad money pushes really good money to the sidelines. And so you could see, and listen, just real quick, history lesson, El Salvador left the Colón in 2001 because they were going into the beginning stages of what looked like hyperinflation. They don't even issue their funny money anymore. So their central bank's pretty muted.
Right.
basic, and a central bank is supposed to lead and plan from the front end, not like we have in the United States, where you have a Fed that comes in a chaos event and tries to do whatever it can to stabilize an already failed market. That's not central planning. That's a fireman Ben Bernanke, right? And so what happened is a lot of these South American countries have converted, and Central American countries have converted to using the dollar because it created at least an element of stability among their currency. The problem is maybe looking forward, they don't want to inherit what's coming to the US dollar. And they're all assuming that a dump truck full of debasement is on the horizon, because really it boils down to Social Security and pension funds. That right there is $135 to $150 trillion check that someone's going to have to write. And I'm thinking these governments are just looking, and they're not, because you live in a South American country, because you're a marginal dictator, authoritarian, whatever, it doesn't mean you're an idiot.
Right.
It just means you live in a small country. And I look at these countries more like little corporations, right? Corporations with armies. And these corporations with armies are saying, I don't think I trust the US dollar alone, and I'd love to have an ancillary competing asset. And so if you look at these as companies, they're just companies that want to take Bitcoin on their balance sheet and want to have a rational excuse to do it.
Exactly. You see how, okay, so he makes the announcement, right? The bill is still in conversation, but the bill gets passed. The very day that bill got passed, he's tweeting photos of the geothermal wells that they're playing with. Then he's posting pictures. This is what it's going to look like in X. And I've got my guys, the quote unquote civil engineer element of our government, they're drawing up plans for the Bitcoin mining facility. Now, when you're a company and you don't have, let's say, the ability to print your own money anymore, and you're kind of on somebody else's standard, well, if in your quote unquote public works fund, you could build a Bitcoin mining facility, now you're a sovereign nation mining Bitcoin for your own treasury reserve asset off of free electricity. So you got the cost of construction, you got the cost of manning it, the labor, right? And the cost of maintenance, and obviously the upfront cost of all the ASICs and those type of things. You start banking Bitcoin. It's like the government mining gold and keeping the gold it mines.
Yeah,
which we saw all that happen in the teens and 20s and 30s and 40s in these Latin American countries. Those that had found gold deposits, the countries put the engineers to work and kept the gold for their own reserves.
And you notice too, these guys, even in Venezuela, they're not saying we're leaving the dollar, and they're not saying Bitcoin has become a standard currency. They're not even saying Bitcoin's a currency. They're allowing for a scenario where you could use Bitcoin in trade. That's all they're really doing. Why does this bother the IMF? Because the IMF likes making predatory loans. That's their whole fucking business model. That's their only business model. And the IMF looks at this and says, well, this is problematic. But they're not wrong either. Because the IMF is scummy doesn't mean they're wrong. It is problematic if you look at Bitcoin as money. If you look at Bitcoin as currency, it is problematic. Only it ain't currency. It ain't money. It's a store of value. Asset. And it allows people, the impoverished, like it has been. And this is the thing when I always giggle when people say Bitcoin's a rich guy's investments for rich people. And so that's the dumbest way to look at Bitcoin, in my opinion. Well, that's absolutist. It's a very dumb way to look at Bitcoin, because you look at impoverished nations, you look at Venezuela, probably the most profligate printer of currency in the last like 6 or 8 years. And massive actual hyperinflation, which definition is 15% month on month. 5% a year. That's not hyper. That's nothing. We're talking about 15% month on month on month on month. That's hyperinflation. Okay. Now, Venezuela went into massive hyperinflation. You know what keeps millions of people some amount of food on the table? Bitcoin.
Mining Dash and mining Bitcoin.
Yep.
And mining any of those proof of work protocols.
Taking that subsidized quasi-free electricity, nothing's free obviously, but taking that and turning it into some amount of digital asset that can protect their purchasing power. And that brings us all the way back to the beginning. Money, currency units is not wealth. Purchasing power is wealth.
Right.
It doesn't matter how many currency units you have. $100 million invested, just real quick, $100 million invested in bolivars in 2013. If you took $100 million US dollars, went to the bank in Venezuela and Caracas, you said, okay, swap it into bolivars. You know how much that 100 million is worth right now today?
A loaf of bread and a half a stick of butter.
Like 13 bucks.
Oh, okay. Half a loaf of bread and a half a stick of butter.
Like floats between like 13 and 30 bucks. 100 million US dollars.
Yeah.
That's what debasement looks like. That's what losing your purchasing power looks like. And so you don't buy Bitcoin to get rich. You buy Bitcoin to not get put poor. And so if all Bitcoin does in Central and South America is keeps a little bit of extra food on the table, it doesn't really matter how we get there.
And from an individual standpoint, you're absolutely correct. And from a government's standpoint, specifically Central America, and in some parts of South America, this is very true, there are amazing renewable energy sources that are developed and some that are going to be developed, because the bottom line in mining is the variable cost of electricity, right? ASICs are pretty much the same price for a Russian miner as it is a Chinese miner or a US miner, right? Those costs are fixed. The variable cost of electricity is the key component. And if you've got geothermal, hydroelectric, massive wind and solar, these type of things, the variable cost of electricity will make a lot of decisions in a lot of these countries. Costa Rica's got a ton of volcanic action as well as hydroelectric from water. A lot of these countries do. You know, just the nature of the topography, the land. Brady, just a heads up. Prepare yourself for final thoughts because we're getting towards the end of the show. I'm going to bring him in. There's Brady. So with, you know what, I'm going to do this. I want to go here, and I want to give my man, Nick Black, the final thought on all things layer one, all things Latin America and digital currency, even if it's a digital asset. What do you think, Nick? Final thoughts. Final thoughts
are, think in terms of percentages and think in terms of sectors. Don't think of who's going to win. Get away from the minuscule, get away from your microscope, take off your goddamn monocle and just back away and just look at this space as sectors. This is a balloon that's going to expand and expand. It's a $2 trillion balloon. It's going to eventually be a $2.5 or $3 quadrillion balloon on its way to infinity, because you can print currency units out of nothing. So as that balloon expands, all of these assets that have real value should expand. So your mission in crypto is to figure out where is the value. And if you find things with value, invest according to your belief in the amount of that value. Percentages, not dollars, right? Percentages, not dollars.
Well said. Now I'm going to ask you to stay on screen, but I want to put on the big screen producer extraordinaire Brady. First I'd like you to think about how would you like to respond to being called out on national YouTube television as being a producer who can't get a JPEG for the show he produces. What say you to that particular plan?
Well, I appreciate everyone's concern, and I just like to accept this award on behalf of. It's a good reminder, and it further compounds, or I guess it piggybacks off Nick's mention of percentages. and that recently that investing should involve percentages. Now when I start weighing what I want to do, I weigh it with, if I want more time to myself, I have to do something now that might be different and I might not like it as much. But because I understand I'd be giving myself an opportunity to collect more time to then have in the future, it's percentages. It's easy. It's just hard to do it and not be impatient. And I think these bear markets help remind us that, yeah, it's fun when it goes up, but when it doesn't, if you're not either busy or still smiling, you're doing something wrong.
Ah.
No one likes losing money, but then you should be studying, or you should be, trying to figure something else out so that you can get more fiat into crypto. So that's kind of been my journey as well, is how do I increase the cash flow faucet and also get more of my time in the future? And it's revolving around percentages.
Wow, Brady, that was incredible. That was a great final thought. I'm going to keep you guys on the screen while I do mine. I will tell you folks that as I continue down this path, I realize I'm going to be intellectually honest with you guys. Back in March-ish, as Bitcoin was 60,000+ and my portfolio was monstrous and bigger than I ever thought, I started to kind of think that maybe this was what I had always hoped and dreamed these investments I got would do. We all know reality came and slapped me in the face and reminded me of something that I really truly do believe in, and that is, in the short term, I don't think this is going to be life-changing. I think this is going to be a much longer game than many of my peers think it is. I've never been a moon boy guy. We're gonna this da. I think we're going to see steady growth. I think we're going to see 3 steps forward, 2 steps back, 3 steps forward, 2 steps back. And until we get to an inflection point where, I don't know, $5 trillion, $10 trillion market cap, it's going to be much of this type of thing until we've got, entire coalitions of companies coming together and circumventing the old guard's stranglehold on the movement of money around the world. It's going to be much of the same. It's a speculator's game. And what do speculators need more than anything else? They need patience and capital. So keep your day job.
And methamphetamine.
Well, that's your grandmother. You're right. There are some speculators, those baby boomer speculators that are on meth, like Nick's grandmother. But anyway, don't quit your day jobs, folks. Keep dollar cost averaging into the in these projects that you believe in, or stand pat. For those of you that don't like the idea of yield, get a hardware wallet, take it offline, go to the beach, enjoy your family. This is a growing industry. But I don't think any of us that are sitting here with $10,000 portfolios are going to be millionaires tomorrow. I think that's a fool's errand. So just have caution and have fun. Invest in quarterly. And Tuesday through Thursday, 9:30 a.m. Pacific time, tune in to Crypto and Coffee TV Livestream. Follow Nick on Twitter at NicholasBlack60. And if you're in the LA area, look up LA Exotics. That's the name of the business, right?
Drive LA.
Drive LA. They do accept Cardano, Bitcoin, and I hear there's even talk that they'll accept Bitcoin and XRP and Ethereum for your exotic car rental.
Man, you want to rent a car from us? We'll take blood plasma.
We'll take blood.
We actually, fun little final note, we just rented a car for a month to Conor McGregor.
Yay! Yay! I hope it's heavily insured. Okay, folks, thank you so much for tuning in. As always, it's a joy to have so many of you continue to support this channel. It's much appreciated. And we'll see you right here, same time next week. Ciao.